Blackrock.
Blackrock. Blackrock.
Blackrock.
Blackrock.
So who are BlackRock and why are they considered by many as one of the most evil businesses in the UK? BlackRock is the largest asset manager in the world, controlling over $10 trillion in assets. That's more than the GDP of most countries and 3 times the GDP of the UK. They manage money on behalf of pension funds, sovereign wealth funds, governments, corporations, and everyday investors too. Because of their scale, BlackRock doesn't just invest, they're now starting to influence. Their recommendations can shift government policy, their ownership stakes can affect how companies behave, and when they move into a sector, people really start to take notice. BlackRock pretty much invests in anything and everything, from tech stocks to government bonds, to Fortune 500 companies, and now the residential sector within the UK too, with £1.4 billion recently being allocated to residential development. Now, as this is a property YouTube channel, let's look into this further and see what it all means. The UK is in a housing crisis, with house prices being at all-time highs, rents being at all-time highs, and affordability being at all-time lows. Now, since COVID, we're supposed to be delivering 300,000 houses each and every year, but we haven't come anywhere close to that. So with a huge undersupply in houses and a huge demand, how exactly is BlackRock investing in the UK property market, and what does that mean for us? As a large institution, BlackRock aren't buying up individual family homes. Their focus is far more strategic and scalable. BlackRock is targeting large-scale rental housing developments, what's often called build-to-rent, or BTR for short. It's also known as the Private Rented Scheme, or PRS for short. This model is all about creating entire communities of rental homes that are owned, managed, and operated by institutions for long-term income. BlackRock is investing in these schemes across major UK cities, often in partnership with large developers or housing investment platforms. They're not building these sites themselves, they're simply providing the capital to purchase and hold these properties for long-term income. So why? Why is BlackRock doing this? Well, as an investment vehicle, rental demand in the UK is absolutely booming. Home ownership rates have declined, interest rates are high, and millions of people now rent by necessity, not by choice. In fact, institutional investors such as BlackRock, who have allocated $1.4 billion so far, is actually only 30% of the overall allocated $4.3 billion for the UK build-to-rent sector. This is then projected to hit $8 billion in a not-so-distant future. So while politicians talk about solving the housing crisis, BlackRock is quietly positioning itself to profit from it by owning the very homes people will be renting out for many years to come. So why is BlackRock, an American investment fund, and other global giants targeting the UK property market specifically? First off, the UK has a chronic housing shortage. For many years, governments have failed to meet their own house building targets. The result? Rising demand and not enough homes. At the same time, property prices and rents have soared. According to Nationwide, the average UK house prices have jumped from £156,000 in 2008 to over £290,000 today. That's more than 8 times borrowing on the UK average salary. More people than ever are renting by necessity, not choice. High deposits, mortgage restrictions, wage stagnation have pushed ownership further out of reach, especially for young professionals and key workers. For investors like BlackRock, this creates the perfect storm. High demand, low supply, and a captive long-term rental market, especially in major UK cities. Add to that a stable legal system, supportive planning policies for build-to-rent and private rented schemes, and a government appetite for institutional housing investment. All this together makes the UK a very safe bet for these large institutions. Now let's talk about what all this actually means for us, the average Joe, the people simply trying to get on the property ladder. As institutional investors like BlackRock pour billions into buying up limited housing supply and renting it out, competition is heating up, and not in a way that benefits us. With more land and new build stock being directed towards build-to-rent schemes, there are simply fewer homes available for the private sale. This pushes up prices and it pushes out buyers. Even those who can scrape together a deposit face tighter lending criteria, higher interest rates, and bidding wars, often against cash-rich institutions who never need a mortgage. So many are stuck renting indefinitely, paying more each year with no equity, no ownership, and no end in sight. So what is the upside of institutions like BlackRock investing in the UK? On the one hand, build-to-rent developments backed by firms like BlackRock are delivering a lot of much-needed housing. Thousands of new professionally managed homes are coming to the market, and fast. They've raised the standard of rental living with better design, on-site management, and amenities that private landlords rarely offer. And also, what if you don't want to buy? Well, this is also a great opportunity for people that just want stable, long-term rents. But here's the flip side. These aren't philanthropic ventures, they're profit-driven strategies. If you're a buyer, you're now competing with institutional money that can outbid, outweight, and outleverage you. Home ownership, especially for younger people, keeps slipping further out of reach, and communities made entirely of renters risk becoming transitory rather than rooted. This becomes another form of gentrification as people become more and more priced out of their local markets. And while these schemes promise supply, many locals argue they don't meet local needs, just institutional investors' appetite. So why are major house builders like Barratt Redrow and Vistry working with institutions like Blackrock? It's simple. It's about managing risk. Imagine you're building a development of 1,000 homes. Traditionally, you'd be selling to 1,000 private buyers, each with their own solicitors, delays, and endless questions. But if Blackrock comes in and agrees to buy 400 of those homes, now you're dealing with one buyer, not hundreds. That streamlines the entire deal and reduces your risk and your exposure as a developer. The benefits also don't stop there. Blackrock will often offer forward funding, so instead of paying for the homes once they're complete, they'll drip feed cash into the development, maybe £50,000 instalments per house while the project is being built. For a developer, that improves cash flow, reduces financing costs, and significantly de-risks the build too. Yes, institutions like Blackrock want a discount for buying in bulk, but in an uncertain market, a guaranteed buyer with deep pockets and upfront funding, well, for a developer, that's worth its weight in gold.
This video is sponsored by Landstack. Landstack is an online mapping tool software that has everything you need all in one place. It combines Google Maps information, Rightmove data, local council planning policies, and also company house information as well. It's feature rich, so you can look at allocations, greenbelt information, and ownership details too. So if you're looking to build your own home, or if you just simply want to know what's going on within the local area, you can get started for free today.
Blackrock's interest goes far beyond just buying homes. They recently bought a large stake in the UK's biggest brick manufacturer, now playing a significant role in the material supply chain of the UK housing market. They've invested heavily in solar panel companies, profiting and influencing government policy on regulations for energy efficient homes. And they now own the UK's largest offshore wind farm in the North Sea, along with Gatwick Airport, London City Airport, and major infrastructure projects too. So here's the real question. When one institution owns such a large share of UK national infrastructure and now is pouring billions into managing our housing sector, who are they really serving? Is this a benefit to the British public and UK society, or will this influence simply be used to benefit their shareholders at the UK's detriment? I guess only time will tell.